Hello and thank you for joining me. I'm Jerry Sarmiento from Cypress, Texas in Northwest Houston. It's a beautiful, bad, very wet weather. It's been raining all day. It is right now 4:30 p.m. on Monday, oops, January 24. So it's almost the end. I can't believe it's almost the end of the month, almost the end of January of 2022. And it's 4:30 p.m. in Central Time, which means it's 5:30 p.m. in New York, which means that market has been closed for a long time now. And I just wanted to give you a view of what I'm thinking. I have a previous video that I posted here back in March 28th of 2021. So in a couple of months, it's going to be a year since I posted my ideas on what I called my view of the market as of that particular day. If you can go back to that posting in which I explain in detail what my thinking is, and I haven't posted pretty much anything since then for two very good reasons. One is I'm not a YouTuber and I'm not a vlogger, and number two, I'm a real trader, so I'm busy trading and investing in my account, my investment account, of course, and my swing account and my day trading account. So I'm more interested in spending my time there than creating videos. But I thought that the market activity these days is very, very interesting with everything going on. With Russia threatening. With war and whatnot, and the Omicron thing, the famous Omicron, the Delta, the Gamma, the Zeta, the Eta, Theta. I don't know. Anybody knows the Greek alphabet there? Who knows what's next coming down? And the killer bees. Well, the killer bees were last year, or killer wasps. But we have that. We have inflation. We have people pissed off with the government. We have shortages of this, of that. Gas prices going up. So everything seems to be going in disarray. So, and a lot of people talk about that, like when I get my little clips in the morning about what to expect during the day. They said futures are down because Russia is threatening, blah blah blah, or Omicron did this to the fleets of Carnival cruises and cruise lines and all that. So it's always something to blame. But what I'm trying to say here is that, yeah, there's a lot of things to blame. But here's a monthly view of the S&P, Standard & Poor's as the SPX. A monthly view from, 1930, I think is as far as I can go back on this, on my system here. I'm using, I think, or swim right here, right now. But this goes back to 1930. So over the decades, you can see the blue line is the 20-period moving average, and the chart is a monthly chart. So this in effect is the 20-month moving average line. And what you can see here is hard to tell, from the early years of humankind in trading, which are the 30s and 40s and 50s. Can't really see much of what's going on there. But if you start amplifying this, like you go back to the 80s, you can see blips going up above, extending above the 20 moving average, and extending underneath the 20 moving average. And the fact that when it extends, it comes back, it crosses, comes back again, it goes up, comes back. Here is a more recent 1995 period through, 1995 through 2000, 2001. The activity is much different now. It's more volatility. Things are moving in different ways. This is riding above the 20. It departed too far away from the 20 moving average, so it was overextended. Pulls back immediately. Not immediately. I mean, every one of these bars is a month period, and pulls back in, bounces back up, pulls back in, bounces back up, pulls back in, breaks it underneath. Things are really ugly. This is September. What month is that? March, September, September of 03. No, September of 02. But anyway, the point is that it's riding underneath, and it comes back to the 20 and it crosses above and pegs to it for a while. Things get ugly here, and so on and so forth. So you see what I'm saying? Basically, if you look at my previous video from March of 21, I was talking exactly about this, the fact that every time this thing overextends itself from the 20 moving average, it tends to come back to it. In more recent times, this is what I was talking about in my last video. Look at this. This is a 21% overextension from the 20, and immediately in month terms, started to pull back into the 20. It didn't reach it. It started climbing again. Here was at a 13% overextension. It pulled back with force and pulled back so hard that it broke and went down by 13% under the 20 moving average, and then went back up, and so on and so forth. More recently, in February of 2020, it overextended to 17%, and it pulled back down all the way to 24% from the 20 moving average, monthly moving average, and then came back up. So this is modern history, right where we are right now. When I spoke on my video last time, which was in March of 2021, we were right here. I think it was like right around that point. The extension was over 17% from the 20 moving average, and I was saying this thing needs to come back. This overextension is too much. And I even said that maybe the laws of gravity have changed in recent modern times, because these things moved up much more than normally. Well, actually it did 17 to 21 here, but it moved quite a bit, and I didn't see any pullback. As a matter of fact, it continued moving up, and this was a very nice period of making good wins, good gains in the market during these few months: March, April, May, June, July, August of last year, where it reached 21%. At this point, it was like in my mind that this thing is not going to continue. It can't continue going like that, and unless, as I said before, the laws of gravity have changed and things don't fall to the ground anymore. But time will tell. History tells us that it always comes back, and this is unusual that it's been overextended for such a long period of time. Very unusual. It tried to pull back here, it didn't, went back up again, and this is where we are today. This is January of 2022. We were at an overextension of about 23%, 22 and change percent in the month of December of 2021. And this is basically the result of today and last week. Let me see. Let me pull in. This is my daily chart for the Qs and the SPYs, and this is the action today. This is last week. This is the previous week. So we had all-time highs here, and it took basically no time to come back hard as it did today. Today it was a very ugly and scary moment when it opened, because it opened right here on the SPY, and the Qs opened right here. So it was a gap down after several days of breaking down. It broke underneath the 200. My orange line is the 200 moving average on the dailies. These are both dailies. These are 15 minutes, so never mind, don't pay attention. These two over here are my futures, so don't pay attention. We're looking at dailies to see what's going on. And so it was an ugly and scary moment today, and it's one of those moments in which you say, gee, maybe this thing really is going to pull back with force and with uh, big force and violence down to this 20 moving average, and we may still see it. I don't know. Nobody can tell what's going to happen tomorrow, what's going to happen next week, what's going to happen next month. But for today, the SPY and the Qs printed both beautiful bottoming tails. This is a beautiful bottoming tail. So if I can guess what's going to happen, the thing probably is going to bounce all the way up to maybe the 10 period moving average, and then there's going to be a fight over there what to do, whether to bounce back down or break it. We don't know. I don't know. Nobody can know. But the fact is, for tomorrow, we're probably going to have some opportunity depending on how this thing opens. My futures right now are looking right flat. What is it, 441? It's about 2 hours after closing of the markets. So it's really flat, a lot of indecision. Who knows? Maybe we have reached a bottom. I don't know. We'll find out. If we have reached a bottom, it would be a good opportunity to do some swings buying. But the fact is, we're riding under the 200, we're riding under the 10, we're riding under the 20, and under the 50. Same thing with the SPY. So not until it reclaims these levels here is when I'm gonna feel comfortable doing swings on the long side and longer term day trades on the long side. I'm not a short player, so that takes me out of the game of shorting things. And I used to short a long time ago, but I don't know how I got spooked at shorting, because when you short, there is no limit. You can lose it all. I mean, the stock Tesla, for example, can go all the way to the moon and non-stopping, and if you're short, that's gonna be a really ugly squeeze. So don't like to get squeezed. So that's why I decided not to focus only on longs. But the fact is, to go long is gonna take a little while. We need to reclaim these levels here. In the meantime, there are a lot of scalping moments during the day. I closed my execution screens already, so I can't tell you. But I did today. I think it was like 5 trades, and I lost on one. The very beginning, it was a horrible trade. It was at the open. I did Tesla on a long. I don't know why I did it. I don't know if it was fear of missing out. I shouldn't have that anymore, but you never know. I saw some momentum building up on Tesla, and my impulses got the better of me, and I went long, and I closed it out not long after that with a very pretty ugly loss. I recovered all my money back during the day, but it took me 4 more trades to get it back, and there were moments in which I said, I should stop trading right now, because it was not a comfortable situation, because the first part of the day was around here in this area, and or here, because Tesla is on the Nasdaq, so it was on the lower part. So it was a lot of action there, a lot of volatility, and it was not a very comfortable moment. I got better at the end of the day when it was more on this side, and especially at the closing. But again, these are the things you have to keep in mind always. Where are you? Are you under or above? And then that's your daily view. And you look at your other things like the VIX. That's another tool that tells you where things are going. Of course, every time the VIX breaks down is good news for us long players. But you have to keep an eye on all of those things. I look at the ticks also, and I look at the other couple of other things. But anyway, the thing I wanted to talk about today because it's very interesting times, very, very interesting times, given everything that's going on in the world. But we have been through wars before, we have been through major disasters in history, we have been through recession, depression, I mean, you call it. And this thing has always moved around the 20 moving average, always, regardless of what's going on in the world. Always. Now we're going through a lot of things in the world. As I mentioned before, the tremendous inflation we're facing. Russia threats to invade Ukraine. The response of the U.S. is gonna be, we don't know. The Omicron and all the Greek letters threatening us with new vaccines or whatnot, or locking up places. God forbid if all that happens all over again. But I already got my COVID, not the vaccine, my COVID. Our entire family got it, and it was fine. It was not a big deal. But it's everything affects the market. But what I see, the laws of probabilities tells me that it is very probable that this thing is going to peg back to its 20 moving average like it's always done it. So it's very probable that this thing is going to come back here, whether, as I said on my March video of last year, is going to hit it with force and violence like in the next couple of days and break it, or it's going to keep moving sideways and wait for the 20 to catch up, which is a correction in time rather than a correction in price. But that's it. Those are my thoughts for today, and tomorrow, Tuesday, should be an exciting day like it was today. And I wish you all luck, and think through your trades. These are not moments to be impulsive like I was this morning. So, and it doesn't matter how long you have been trading, you will always get that. And it's hard to shake it off, but we try. And so anyway, thanks again, and we'll see you soon. Have a wonderful Monday evening. Bye now.